Dear investor, thank you very much for watching this new edition of Bing Cafe. As an investor or a trader, we're many times confronted with events that we don't have influence on. Something that happens all of a sudden, such as the Iran crisis at the beginning of 2020, or even the coronavirus. Nobody could predict that that was going to happen. This time, I don't want to talk about those sort of events and what you can do to harm yourself or to protect yourself for those events. I rather want to talk about events that we know that they're going to happen. Think about the Olympics, or in this specific edition of Bing Cafe, I want to talk with you about the US elections. In the following chart, you see all the US elections with the S&P 500 index returns over the last 70 years. In total, that were 16 presidential elections. What can we see? The S&P 500, 14 out of the 16 times, had a positive return. So on average, 87.5% of all the election years, the stock market went up. Simple conclusion. The highest return we saw in 1980, that was when Reagan took power. The stock market went up about 32%. And the worst return, or the lowest return, was actually not so long ago in 2008 when Barack Obama took power and the stock market dropped nearly 37%. 2020 is a specific election year because it's also the opportunity for Donald Trump to be re-elected. So when we deep dive into what happens in a year that the president can get re-elected, we see that 9 out of the 10 the re-election years, the market performed actually above average. So it did it actually a little bit better than normal. The average return for all re-election years was 9.8% for the S&P 500 I'm talking about. If we look to those years when a Republican was leading, the average return on the stock market was 11.8%, and the average return on the stock market when a Democrat was leading was 7.4%. Very important. And that is something that we need to take notice of for this year, is when a Republican wins, after a Republican, the stock market in general performed about 11.9%. If a Democrat wins after a Republican, then you should be aware. Why? Because the stock market in general, on average, dropped 1.4%. So for you as an investor, it's very much important to look in this specific re-election year who might win the elections. So next to the elections, of course, our Saxo Bank Strats team also predicted that the healthcare sector this year will be confronted with higher volatility. That's mainly because of the fact who's going to win the elections, but it's not only depending on the presidential election, also the Congress has some influence on this. I suggest for you, once the elections are over, that you have a re-evaluation of your portfolio to see what is the policies, what are the policies and what influence will they might have on global economy, but also on domestic economy within the United States, and therefore also what will be the influence on your specific investment portfolio. Thank you very much for watching this edition of Bing Cafe, and I hope to see you next time. Thank you.